us to another week of the weekly market recap here with Dash Trader. This is the week of September 8th through September 11th, and this is our weekly market recap. I'm here today, as always, with my co-host, Jill Malandrino, Global Markets Reporter from NASDAQ. How are you today, Jill?
Always happy to hear your voice on Friday afternoon.
Yes.
I know it's over.
The week is over. Another week has gone by, and we've gotten through the beginning of September, as many kids are starting to return back to school, or maybe not returning back to school, or whatever they're doing these days with the global pandemic. But we had a lot of news this week. We finally got a bit of a sell-off and follow-through on the sell-off. Tech stocks are down 10%, which puts us into correction territory. The question is how low do we go? Do we go all the way down to that key 20% level, which is bear market territory? Your thoughts, Joe?
Yeah, well, certainly our thoughts are with our Wall Street community on September 11th. So I certainly want to acknowledge that. But when we talk about the tech sell-off, we're always like down 10%, down 20%. Well, nobody was worried about the percentages to the upside. So to see it come back in 10, even 20%, and look at the levels that it's coming off of. I think the concern here is the velocity of these moves. And 2020, really, that's been the story of the tape. We're getting 3 to 5% moves, whether it's to the up or downside. And it's just as dramatic on the upside as it is the downside. So am I surprised to see tech come in a bit? Certainly not. It makes sense. People are taking profits. It makes sense that they're looking in other areas where the valuations might be a little bit more digestible. As you and I spoke about last week and the week before, prices had such a massive run because you're basically bringing in 3 to 5 years, accelerating 3 to 5 years worth of growth. And I think, market participants are coming to terms with that and looking for other areas in the market to find some value. I know, they were looking in financials. I don't really see the fundamentals of financials changing that much. Same thing with the energy space. The oil story is not that good. So, I wonder if it's more of a rotation trade versus a trend trade. But certainly, it's not a surprise. And I think in many cases, it's a healthy correction to see tech come back in.
Yeah, I was just saying to somebody a few moments before we started this, I would love to buy stocks. I just don't want to buy them at these prices. I would love to be buying some, certainly Tesla looks a lot more attractive now that it's lost 30% of its value. Tesla was a little bit exaggerated. We've been talking about Tesla as one of the super, super strong stocks leading the way up. And in fact, I've actually heard it cited that they said that Tesla might not be added to the S&P 100. And that was why a lot of people were buying it, which is also why it went down quite a bit more than some of the other stocks. It's not going to be added quite as quickly as people had thought. So they don't want to sit around holding it as it's going down. But yeah, I would love to be buying stocks, but the prices just seem to be so inflated. It seems like the trend towards the digital world got accelerated by the pandemic. So this trend already existed. It was already in the works. But the pandemic accelerated it and increased the growth in these tech companies. And that's part of the reason why we saw such a rapid move up and such a rapid move down. With that said, we also had the European Central Bank saying not surprisingly, that they have no intention of raising rates as the economy is still slow in Europe. But I would think that this is going to be the case across the board, right, Jill? Can you see any central bank really wanting to do anything besides keep rates low and try to stimulate the economy any way they can, because things are still very sluggish?
Yeah, well, certainly in the U.S., that's going to be rates are going to be low for quite some time. And I don't know. I think it's such a confusing picture, Mike, because again, I mentioned before that people were nibbling in the financial sector, but it's not like the environment's going to improve for them when interest rates are going to be lower for so much longer. And I think the bigger concern is we have so much money out there. There's so much stimulus that's in the system. Banks are inflating assets at the same time. And at some point, we can only kick the can down the road for so much longer. I know, when we look at our debt situation in the U.S., President Trump has made it clear that it's a second term issue for him to take a look at. That's not a surprise to hear him say that. And then, obviously Biden's going to be talking about that as well. And it's just, I don't think there's a plan in place to figure this out. And when you think about the stimulus packages, and a number of economists that I've had on my show this week, the concern with jobs, we had that initial bump with jobs as economies started coming back online. But the fact of the matter is a number of small businesses have not survived, right? And there's going to still be millions of Americans who don't have a job to come back to. And the question then is, how much more stimulus can we continue to put out there to support these people? And I know that sounds awful to say, but I mean, do you retrain your skill sets? Do you wait until the economy picks back up and small businesses reopen? But that could be, anywhere from 3 to 5 years. So what are we going to have? Massive inflation? There's a lot of outliers out there, and I think that's concerning.
Yeah, well, that one thing I think the central banks would love to see is they'd love to see some inflation. I mean, this is almost like we're in a state of stagflation. Stagnant economy and inflation, and no inflation actually right now. It's stagflation. So I think that they would love to see inflation. But the fact of the matter is that people have just cut back their spending. They have not quite adjusted to everything that's gone on in terms of the changes related to the pandemic. And right now there's a lot of jobs that are disappearing permanently, not just short term. I think most of the short term jobs that were going to come back have started to come back or on the way to coming back, especially with New York City next month, reopening 25% for restaurants indoors, which is the next item on our news list, which is New York City finally opening up 25% indoor dining. It really is somewhat amazing to me that New York waited so long when most of the country, kind of already started reopening to some small degree. But now with New York City opening up, I think the other thing is there's going to be no bar service. I really didn't see how they could wait any longer because New York gets cold. I mean, it's September. It's almost the middle. It's the middle of September. So it's good to see. I think that things have reopened to the point where everything that was going to come back or the jobs that are going to come back will be back soon. But I think the long-term effects are just starting to be seen. And on that note, obviously we have to mention certainly our ongoing pandemic. It looks like India, this pandemic seems to move from hotspot to hotspot. It was Brazil, then it was Mexico, then it was Europe in the beginning, and then New York, and then it moved around the country to the Sun Belt. So now it looks like India is the latest hotspot as the pandemic morphs and changes around the world. Any thoughts on the pandemic and what's going on with that?
Well, you know what, Mike, I want to say something like New York City opening at 25%. So I was in Saratoga, which of course has been open at 25% capacity. Same thing, you can't sit at a bar. New Jersey, where I live, recently started doing that. And we have to take some personal accountability as well. Mike, it's not that hard to wear a mask. Wear the mask, follow the rules. If you want to go out and have dinner, follow the rules and don't be part of the problem. It's not that hard. You can't, if you don't follow, wear the mask. I wish I could be a little bit more, you know what I'm trying to say. It's not that hard. If you don't want things to shut down, follow the rules. And then, by protesting these things and politicizing it and so forth, you're only hurting it because it's only going to make businesses shut down. It's not that hard. You wear the mask to go in the restaurant, you sit at your table. If you go to the restroom, you wear it. And when you go out, you wear it. It's not hard.
Yeah, I agree. It's one thing that's just a little confusing to me is like Spain and France had been completely shut down and they reopened with masks, and there looks like they're almost in a full-blown second wave again. I mean, Spain had something like 9,000 new cases or 10,000 new cases yesterday. And France is running in and around 6,000 to 7,000. So even these very well-managed European, quasi-social democracies, once things start reopening, you're going to see an increase, and certainly wearing a mask helps, and people need to do their part. And certainly not having bars and nightlife open seems to be a very big help, because it looks like those countries also reopen their nightlife and large kind of events. But needless to say, I think it is controllable. And I think people have kind of gotten to the point where, they're not really resisting. At least I don't see people resisting things quite as vehemently as before. And people are being more reasonable and responsible about it. And obviously people have learned to live with this. I think that's kind of the end of the day takeaway is it looks like COVID is here to stay, and you have to learn to live with it and take precautions and be careful.
Yep.
So, and on that note of worldwide disasters and disasters of the past, it was 19 years ago today that we had 9/11, and we had the 9/11 disaster. And of course, we are doing our best to recover. We certainly, things have changed in the world since 9/11, but I want us to all remember those people who passed away. And certainly, that we have not forgotten you, especially in New York City. We have not forgotten you.
Yeah, I would agree. Certainly echo those sentiments. And I remember leaving my apartment and walking to work, and it was such a gorgeous day out. It was like that 82 perfect September day. And, to echo what you were saying, the world has changed and we have adapted. Just like with the mask situation, we all came together and figured out how security protocols work in the airport, in other methods of transportation and travel. We did it then, and we can certainly do it now to fight a pandemic. So, we did it before. We could certainly do it again.
Yes, absolutely. We survived 9/11 and the aftermath, various different wars and conflicts that occurred afterwards. But we will endure and get through this pandemic as well. So let's jump to the charts. Okay.
Mm-hmm.
So the NASDAQ has made 2 down weeks. The first time this has happened in the entire rally up from March all the way till now. I mean, we haven't had 2 down weeks except one other occasion. And the other occasion was right here. So we had 2 down weeks, and then we made a sharp rally to the upside, extending even further. But this time we've pulled back very, very sharply, down 10% from the highs. And then certainly we can see here on the daily chart, we big initial sell-off, bounce to the upside, get to the crossing over moving averages. And for the first time, we are now below all 3 major moving averages on the daily chart on the NASDAQ, which is the 10, the 20, and the 50 period moving average. All 3 are above us. And it looks like we'll break down and continue to go down further. I mean, that's usually what happens when price gets below the moving averages. Now, certainly we don't know that. Maybe people will come in and start to buy back the NASDAQ and the tech giants. What are your thoughts going forward here with this big NASDAQ sell-off? Just a healthy correction, or is it start of something that looks a little bit like the February 25th to May 5th sell-off?
I don't know if it'll necessarily be like that because, hopefully we won't see another lockdown, pandemic lockdown. Certainly that can lend some volatility to the market, right?
Everybody seems to be locking down again, right? I mean,
right.
Spain didn't lock down. If they didn't lock down, we're probably not going to see that again.
Yeah, because I would imagine, if you were to get to that 20% level, you're certainly going to find people, picking it at various names. Does, a name like a Microsoft necessarily need to be hit just like it was, in the March sell-off? Probably not. So I think, outside of potential lockdowns, really what I'm looking towards is the election now, and not necessarily the outcome of the election, but how that transfer of power is actually going to happen, because I don't think it's going to be as seamless or follow protocol as it might have been in the past. And if you take a look at, and the thing is, I had, if you take a look at VIX futures are actually priced out, further than the election, which suggests that, traders are expecting more volatility. Typically that subsides after an election, but they remain elevated following that. And again, that could also be, is there a second wave in the winter or so forth? But it really seems to point that, that's where the focus is.
Yes, absolutely. So it seems like we've already kind of priced in some of the volatility going forward. The S&P certainly has held up fairly well, but it's also had a significant correction. It's kind of a little bit less severe than the NASDAQ, as we can see here. We did not have quite the drastic run up that we had in the NASDAQ. It just made a new high, and it's kind of given back and gone back to the flat line to the prior high. On the daily, we are not quite below the 50-period moving average on the S&P, although we are below the 20 and the 10, which says that it's showing some relative strength compared to the NASDAQ. And we had been saying this all along, Joe, that the NASDAQ has led the rally up, and it would be the one that would take the rally and start the correction if there was going to be one. And certainly that's been the case. As far as the Dow Jones, certainly never made the run that NASDAQ did and the S&P did, but it did get just about to its prior high, and then it's kind of topped out a little bit. And of course, the daily chart, it's above the 50 period and below the 10 and the 20 as well, but certainly not as extreme as you would expect the Dow not to be as extreme as the NASDAQ and the S&P. As far as gold looking like it's getting ready to make another run. It certainly has formed what looks to be like a bull pennant, which might indicate that we're ready for another run. I mean, could it pull back and pause some more? Certainly, but I think gold has made a tremendous run, as you and I have been mentioning. It's done exactly like it's supposed to. Any thoughts further on gold in terms of like numbers, pricing? I know you sometimes have some guests who are gold bugs and have some insights into that.
I really haven't had anyone recently that has had an opinion like to one side or the other. But it's interesting to see how it's performed relative to stocks. I feel like going into the volatility we saw this week, all asset classes were moving together, vol was moving together. And when you see that happen, that's when it seems like we always get that fallout there. So, gold seems to have consolidated a bit here, more so than the stock indexes. So I think really from a technical perspective, depending on which way it goes from there, assuming fundamentals remain the same, that's really going to determine the direction.
Yeah, I mean, and that's exactly, I mean, gold did what it was supposed to do. It's made a tremendous run up, and so far it's been holding its gains pretty well. But yes, that was what was part of the big issue of this sell-off, is that it was a sell-off across the board. It was the Dow, it was the NASDAQ, it was the S&P, it was in other asset classes like Bitcoin and gold. And that was what was somewhat reminiscent of the end of February into early March sell-off. And this was the big one, right? Tesla was the big runner. 1 second, please.
Yeah, take your time.
Okay.
So yeah, Tesla, that's one, that's a tough one to wrap your head around, Mike, that's for sure.
Yep, no problem. Yeah, it certainly was a big mover, Tesla. So Tesla, it has gone back has pulled back around 30%. And so far, it has basically, I mean, it really participated in a very, very big run, partially due to the expectation that the S&P was going to add it to the index. And has that been the case? Did the S&P, did the NASDAQ certainly added it, but the S&P was not. What was the reason for that? I remember you had mentioned it to us once before.
Yeah, well, Tesla's part of the NASDAQ 100. In fact, it's one of the top constituents. It's part of that cluster that makes up 60% of the weighting on the index. But I think it was about a month ago, there was chatter that it could potentially join the S&P 500 index, which means managers that are indexed to the S&P 500 would have to own the stock. So that was part of the bump. But then when they announced the stock split, that's really what got shares moving, of course. People looking, even though it's less capital intensive to buy a share, the valuation doesn't change. As we said before, 10/10s equals 100, $100 bill equals $100 bill. So I think it just has to come back down to earth from there. But Mike, I have a question for you as a technical trader, removing all the fundamentals. When you see a chart like this, where the moves are so extreme. Can you even use technical analysis in a chart? Like if you look at the weekly, how do you determine entry and exit points to manage your risk on something that moves like that?
So to manage your risk is easy because it's just the difference between your entry and your stop, right? So regardless of whether the moves are big or not, it's all about what your particular trade parameters are in that particular situation and setting. In terms of the technical analysis, absolutely technical analysis still remains to be helpful. In fact, technical analysis says that 70% of the move is up to in the last 30% of time. So 70% of the move is in that last 30% of time. And Tesla really is very indicative of that 70-30 time, it made 70% of its move in the last 30% of time. And you would expect it to pull back in the same fashion. And that's exactly what it did. It blasted off, it pulled back, it came right back to its rising 50-period moving average. And it bounced back up on, again, a very typical Fibonacci retracement back up to its crossed over moving averages. And it got back into the range from which it had been previously. So yes, it certainly, you could see here, bullish. Tesla actually from technical analysis still remains to be bullish because it's above all three of its moving averages. Now, if you notice, the moving averages have spread further apart. And by spreading further apart, they have made more room for a bigger move to the downside when it corrects. So once it bounces, then it'll move down, and obviously it'll make another drastic move down, but it'll kind of cascade down if it's going to go down. You can see that it certainly had a green bar here at the end of the weekly today. But that is normal because it came into its 10-period moving average. So technically, it's still trading according to plan. It's just moving in bigger, wider waves. And I think that you have to just be careful because, you have to take smaller share size and use stops and targets and all your other technical tools to manage your risk. But for the most part, technical analysis still serves you well. I would say where technical analysis is not so helpful is when we're in a totally news-driven market, a market that is not responding. It's like the technicals were this, and the perceived value changes overnight because of the news. So,
well, we certainly saw that.
Yeah, that changed. That was the pandemic. Basically the pandemic and certainly a lot of the political news that followed. All right, Apple. The reason I brought Apple up here is because of the split. This was Apple's earnings right here. It blasted off and ran higher. And then after the earnings, it blasted off that was really on the split news and the really, really big public reaction, I think, to the four-way split on Apple. But of course, you could see that Apple is a little bit worse, and Tesla certainly was a little bit worse than the other tech companies. And I think that that's certainly been indicative of it ran the way up, and certainly now it's a little bit more negative on the way down. Would you agree with that, Jill, as well? That Apple kind of led this run up?
Well, what's that old adage? Stocks take the stairs up and the elevator down.
That's right. Yep.
Look at the chart.
Yeah.
So, yeah, I think Apple, from a fundamental perspective, is a little bit easier to tell versus the Tesla story. But again, the stock split certainly lended to some of that. I think Apple, in addition to a number of the other larger tech stocks, they were just running because money was being piled into it, whether you want to talk about the SoftBank story or retail traders adding money into the market, whatever the story is. Certainly it's not trading that we're accustomed to seeing. And I think it's a combination of all of that. And I think that some of the air has come out of the balloon. And I think in a way this is healthy, and we're getting back to fundamentals and we're getting back to technicals so that we can appropriately determine the value of these stocks. So if you think about it, you have all this money going into them. Of course, you have all the stimulus in the market as well. It's incredibly hard to value stocks, right? Yeah. So when you see a company, I think about it, you see a company that maybe beat 50 million on revenues, gain, 10 billion on market cap after the print, it just doesn't make sense. So, right. it just got a little silly with earnings and, with everything. When you see a stock like a Tesla gaining the value of a VMware every single day, it's you can't add $50 million in revenue and then gain, multiple billions of dollars in market cap.
The CEO comes out and says his company's overvalued and it goes up more.
Right.
That Tesla story is just like ridiculous. It's just a little bit astronomical. The one that I thought was really interesting, and we had been mentioning this many times about Google because of the possible threat of a breakup on Google, is the Google Alphabet story. I mean, it really sold off hard in this sell-off. Just a tremendous sell-off on Google. And certainly it looks like that it's ready to bounce potentially because it's kind of at support. You never know that it can continue to go straight down. Who knows? But certainly it made a tremendous run up after it looked like Google had been weak after its earnings. It was the one weak man of the FANGA stocks. And then certainly now it has sold off and, it's kind of returned to its weakened state. And it is probably the one that is most likely to be targeted by the Department of Justice. I guess it's the antitrust, whatever I don't know if it's the Department of Justice or not, but it's certainly the one that's being targeted as a possible trust or dominating its industry. Any news on that as well, Jill?
Yeah, I haven't heard anything really new on Google. I think what you had mentioned before is the antitrust is really what is the headwind with the stock right now. And again, I think, going to the election, these larger companies like Google, like Apple, Amazon, it's going to be a political hot potato.
Absolutely.
And I think that's really where the volatility is going to come into. I don't think, fundamentally the metrics of the company have changed. Facebook is another one too that has exposure to that. But I think that's the headwind, that's the risk factor, because it's going to be, it's going to become political too. Well, it is political. So.
It's already politicized. What hasn't been politicized in 2020? That's the question. Seems like everything has been politicized lately. All right. Well, Jill, that takes us to the end of our stock review. I just got a couple of announcements. Okay. So as it seems like it was just yesterday, we were finishing up the summer competition, but we're here at the fall competition already. So the fall competition announcement is registration for our fall intermediate trading competition opens this Sunday and runs from this Sunday on September 13th and runs through October 4th. The competition will begin on October 5th and will run for 10 trading days till October 16th. Okay, so don't miss our early bird special. Sign up by Saturday, 9/19, and get $50 off on your full number one best trader competition registration. The price will go up to $150 on Sunday, 9/20. So sign up early and save. Okay, go to visit onebesttrader.com for more information and to sign up. Prizes include the winner's name displayed in the NASDAQ market site. Thank you very much, Jill, for always helping us to get that taken care of in the NASDAQ market site tower in Times Square. And certainly you can be a guest on Jill's show here, Trade Talks, and have an interview. We're also going to be having a virtual luncheon with a special guest from the trading world, and the lunch will be provided by Dash Trader. And of course, you get your 6 months access to Dash Trader, the Pro Platinum. Nobody should ever forget to follow us on the Dash Trader Pro channel. I'm just about wrapping up my options series. I'm going to be doing level 1 through 4 on options, teaching people about trading options using the Dash Trader platform. You can subscribe to us on YouTube at Dash Trader TV. And you should certainly already be following us on social media, but if you haven't already done so, certainly follow us on LinkedIn, Twitter, Facebook, and Instagram. And Jill, and so ends another week. Let me get going before I get thrown out of WeWork. But either way, have a wonderful weekend.
Thank you. You too. Thanks for everything, Mike.
All right. Bye-bye, everybody.
All right. Take care.
Everyone. Trader competition. Bye-bye all.
Bye, guys.